It's a beautiful Friday morning right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ right here in Lagos. Trust your week has been profitable so far, but it's earnings seasons right here in Nigeria and globally too. A couple of listed companies are reading out results for the second quarter of 2023. But let's get a highlight of some companies, starting off with the brewers. Now, see, Guinness Nigeria PLC incurred a whopping 49 billion naira in exchange rate losses, according to the information contained in its full-year results for the period ending June 2023. Loss per share declared was 8.29 naira versus 7.15 naira earnings per share a year earlier. Revenue for the year was 229.2 billion naira. That's 10% up year-on-year. Gross profit 78.1 billion, 7.5% up year-on-year. And operating profit that was down about 2.3%. Next is oil and gas. See, Total Energies revenue grew by 25% to 139.3 billion naira compared to 111.4 billion. The revenue growth beat the company's estimates of 84.8 billion by over 31.3%. Revenue for the first quarter of the year was at 135 billion naira. Cost of sale and operating expenses topped a combined 132 billion, higher than the 105 billion reported same period last year. To telecoms now, we see Airtel Africa. The statement sent to the Nigerian Exchange. The revenue of its Nigeria subsidiary grew by 2.2% and reported currency of $528 million and 23% in constant currency. Airtel Africa PLC made a loss after tax of $151 million in the period under review. This represents an 184.7% decrease compared to the profit after tax of $178 million made in the same period of 2022. And to some stories now, the Corporate Affairs Commission says it is set to delist 100,000 registered companies from its database for failing to file returns to the government. The Registrar General of the CAC, Garba Abubakar, made this known during a briefing with journalists. According to him, the companies to be deleted have failed to file annual returns in the last 10 years, and notices will be sent to the companies in line with Section 692 of the CAMA 2020 Act. Mr. Abubakar explains that the companies are, however, entitled to be relisted upon payment of the outstanding debt and an order of a court as provided by the law. He therefore advises companies to ensure timely payment of their annual returns to avoid being struck off. And as part of efforts to boost intra-Africa trade, the Central Bank of Nigeria has pegged the amount of dollars to be transacted on the Pan-African Payment and Settlement System, PAPS. In a statement signed by CBN's Director of Trade and Exchange, the bank says authorized dealer banks are allowed a cap of $200,000 per quarter, while dollar transactions for customers are pegged at $20,000. The Apex Bank adds that transactions will be settled using the CBN foreign exchange rate. In June 2023, PAPS signed a memorandum of understanding with 5 African multinational commercial banking groups for seamless cross-border trade payments. So company news now, the non-interest financial institution Jaiz Bank has held its annual general meeting with shareholders applauding the performance of the bank for a dividend of 5 kobo per share. The management made the announcement at the bank's annual general meeting held in Kano, northwest Nigeria. The board notes that despite a challenging operational environment, the bank still maintained its performance trajectory on a year-on-year basis. Take a listen.
The annual general meeting of the pioneer non-interest bank in Nigeria, Jaiz Bank, starts on a pleasant note as board members, shareholders and staff settle down to the business of the day. The Chief Executive Office and his team present the 2022 annual report and accounts alongside the declaration of dividends for shareholders. The management attributes the success to the use of technology into its operation, among other innovations.
You see, in there, you look at the profitability has grown up, the dividend, because any shareholder is always after the dividend, even though that is not the key thing, but the dividend has moved from 4 kobo to 5 kobo, which represent about 25% increase. So this is all a highlight. A young bank that started with 3 branches, and alhamdulillah now we're talking of 47 branches.
The bank is promising to do more despite the economic situation.
under the certain circumstances of the country. They have raised, questions, and we have answered them, and we have listened to them. And we're going to go back to the drawing board in the board and to see how we can be able to do much better.
The major sources of our success is the customer focus, customer centricity, the innovation. We have new products, the SME, that is the medium, small, and micro enterprises. We have new products. We have products for women development, and we also are investing a lot in the digitization.
Shareholders also give their assessment of the bank's performance.
For us as shareholders, we are very delighted because Jaiz Bank has been growing, rapidly, and then of course they are the bank that have been consistent now in dividend payment, growing their asset base and equally growing in terms of their profitability.
In an economy that has been shrinking in a very difficult year, but the bank still was able to, achieve this type of, profit.
The bank promises to continue delivering to its shareholders as it recorded 29% increase in gross revenue of 33.29 billion naira for the period ended December 31st, 2022.
A new report by Jobberman, a Nigeria-based job portal and career platforms, revealed that over 65% of youths are unemployed in Africa's biggest economy. With the rising cost of living crisis and high cost of borrowing impacting businesses, how will youths survive? That is the question right now. Joining me is Arelua Boboye, CEO of Jobberman Nigeria. Joining me right here in the studio. Great to have you. Good morning.
Good morning.
Quite an interesting report there, and the question is, how will Nigerian youths survive without a job? Or is it that we have more of entrepreneurs, hustlers at this time? Is that what this is telling us?
Oh yeah. So thank you so much for having me. I think for us, because we sit at the heart of linking job seekers to job, right? For a long time, we were really bogged down on ensuring employability. But this time, we decided to actually take a look at what people do, right? People without job, what have they been doing, right, for the longest? And it became very vivid to us, right? The extent and the length at which young Nigerians go, right, to ensure that they earn, a daily wage. So it's interesting to note that about 75% or 78% rather of unemployed youth depend on family and friends to survive. So it means that one job that you've got, it's not just for you. You are also funding like 2 or 3 unemployed person, right? And then about 56%, right, of unemployed youth acknowledge that hustle is their means of livelihood. Now, and that is a very interesting thing that came up, because hustle in Nigeria can range from being an Okada rider to being a fashion designer, to being an Instagram.
So basically, the hustles are
undefined.
They're plenty.
Yeah, exactly. Just like a sea of unstructured work, right, in Nigeria. Then the final one, which for me was even the most shocking, is the fact that there seems to be an epidemic, we call it an epidemic of betting in Nigeria, right? We see that a lot of people actually go into betting, and it's been ascribed wrongly to addiction. But what we found out was that a lot of people actually depend on betting as a means of livelihood. Right?
Even though they're making a lot of losses.
Yes. So for them, it's the way their chances, and they're like, look, this 2,000 naira, if I put it in here, and I pull in some odds, right, and I get 20,000 naira, which is a lot more than nothing, right? So they keep, pitching that periodically and hoping that one day it will be their turn.
And obviously, one game is always going to cut that supposed ticket at some point.
Yeah.
But, looking at all of this now, definitely incomes are squeezed at this time. And you did mention that, most of these youths depend on family and friends. But incomes are squeezed right now. Can the family and friends still provide that help at this time.
Yeah, so that is where, you know, the huge and the big concern is, and why it is important that, you know, as a nation, there's a need for Nigeria as a nation to start to push in social interventions, right? So we're waiting for government, right, to really help on this side, because it's beyond just demand and supply, right? It's beyond your own personal economy, right? There's now a need for there to be some form of succor, right, to be able to even survive as someone that is working, right, compared to someone that does not even have a job. And of course, maybe, you know, the second side to it would now be for us to take a look at what we call hustle. For the longest time, when people do hustle, hair quote hustle, we consider it to be temporary. We never really put structures into it, right? But what we have done over time is that we've actually lost real value on what we call hustle, right? This is a good time for us to actually start to put more value into those things we call hustle. So if you are going to be a fashion entrepreneur, then be a full-time fashion entrepreneur. Put all of yourself into it, right? Deliver value, because obviously money will always follow value. Irrespective of whatever is going on in the economy, money will always follow value.
Right, and also we have a lot of jack of all trades, you know, at the same time. But definitely a time where businesses are, you know, squeezed also at this time. We've seen cost of borrowing, you know, go up because of rate hikes. You know, globally, everyone's trying to tame inflation, you know, at this time. But some companies definitely will be looking at cutting jobs.
Absolutely.
That may happen. But how do you set yourself, you know, apart as a job seeker at this point? How do you know, enhance employability?
Okay, so of course, for employability to happen, or for employment to happen, right, there needs to be demand and then supply. So as much as, yes, we would ascribe that employers are cutting, you know, are cutting costs and then cutting staff and all that, we also need to understand that people are leaving the country. Talents are leaving the country. Those people leaving the country, or those that have left a vacuum, right? Some people will have to fill that vacuum. So what is important is that as a middle level or an entry-level Nigerian worker that is still planning to be in Nigeria for this long, right, you should then upskill aggressively, okay? Because this is now an opportunity, a unique opportunity, right, that, I mean, for you to then upgrade very fast and very quickly to fill the shoes of the people that are leaving, okay? Because the need will always be there, right? On the flip side of it, however, right, is now also for companies, because you have to empathize with companies, right? They are the ones feeling the direct impact of this, you know, the economic situation right now. They have to make the adjustment, right? So for employers, it's important for employers to take stock of their capacity. And right now, I have a personal formula for, you know, for capacity, and that is a function of your resources versus your priorities versus your processes. Companies need to look at those three variables critically, right? And, you know, do a match and say, look, what process am I improving, right, to make way for more resources? What priorities do I need to, what things do I need to deprioritize and put more focus on, right? You will see that a lot more companies will actually put more focus on revenue, real revenue generating channels, all right? And like I said before, when there is value, there is always money.
All right, still on the report now, tell us about regions that you know, covered, you know, like the Northeast, Northwest. How did, you know, those regions fare with unemployment?
So we of course, we took an holistic approach. We looked at all the 6 geopolitical zones. So like, for instance, the betting situation actually happens to be very popular in Southwest. Southwest. Yeah, so Southwestern Nigeria actually exhibited the real impact of people depending on betting as a means of livelihood. And we realized that in the Northeast, for instance, there are a lot more youth, right, that have been out of jobs for a longer period of time. For some of them, the average about 4 to 5 years. So imagine post-tertiary education, you are now then out of employment, right, for 5 years. And what we found out is that it's a lot more difficult to even integrate those set of people into the workforce compared to someone that has just recently graduated. And this is something that we are bringing to the fore, right, for policymakers, right? That as much as we are rolling out interventions to impact the life of new graduates out of school, there is a lot of focus on that, which is amazing and great. Let us not forget these people that have been out of job for 5 years, for 6 years, right? That will take extra work to get them in. And we also saw, of course, a direct correlation between being out of job for a long time and crime and insecurity. Okay, and that also, of course, can be seen in the security landscape in Nigeria. Yeah.
All right, talk to me about definitely tech is playing a huge role, at this time in the job market. How is it looking? We have platforms where job seekers and businesses meet. How's that industry looking?
It's amazing. So Jobberman will be 14 years next month. We've been doing this for 14 years, right? Meaning that, of course, we have a lot of expertise as regards visibility between the employers and the job seekers. At the moment, what we have done as Jobberman, so I can speak to Jobberman as a platform, what we have done is, first of all, to reduce significantly the barrier to actually make this job visible to candidates. So as much as possible, if any employer out there, if you go on our platform, you can actually post your job for free on our platform, just to ensure that you get that need out there. Because as much as we say that companies are making budgetary adjustments and all that, they still need people. They still need to hire, right? And these candidates, these potential candidates, need to know.
So the businesses don't have to pay
at the entry level, of course. There are
but there are times where you will pay.
Definitely, there are times where you pay because there are special work that you may need. For instance, if you want us to do like some ancillary deliveries for you or some concierge service for you, of course. But in terms of visibility of jobs itself, you receiving applications, right? You can go to our platform on Jobberman, right, and then post the job. And on the candidate side, we are also really big on capacity development for candidates. So for the past 3 years, we've been running this soft skills training for candidates for free, right? Just ensuring that aside from your proficiency, you are then employable because you have proficiency in all these other soft skills. Also.
All right. In 2 seconds, I know right now, remote jobs are a thing.
Yes.
Right now, we've seen Nigerians getting jobs abroad, and still living in Nigeria. How's that looking? How are you seeing that space, going forward?
It's developing nicely. I think that on the demand side, which is foreign companies, they've seen a lot of value and they respect the Nigerian ecosystem.
Right.
They do, and it's amazing, the many things that has been achieved over time. I believe that there is still more to gain and there's still more to explore, and I know that the opportunities are there, right? And what I see is that it will actually continue to grow.
Right.
Yes.
Definitely. Thank you. It was great having your perspective today. Oreoluwa Boboye, CEO, Jobberman Nigeria. Thank you so much.
Thank you.
All right, we'll take a break now. When we come back, we look at what's happening with patient capital and how Nigeria can utilize that for infrastructure development. That's our next conversation. Do stay with us. Welcome back. Well, utilizing patient capital has become the preferred solution for global development bodies, national governments, and local authorities to address gaps in financing development. But how can patient capital aid sustainable development in Nigeria? That's the question. Joining me now is Mr. Oguche Aguda, CEO, Pension Fund Operators Association of Nigeria, joining me via Zoom. And I also have Dr. Evans Osano, Director, Capital Markets, FSD Africa, in our Abuja studio. Great to have you both. I'll start with you, Mr. Aguda. Tell me, what are the key barriers and challenges to mobilizing patient capital for sustainable development in Nigeria?
Yeah, I think one of the key issues is the policy inconsistency. You spoke about patient capital, which is probably going to long-term projects. So if inconsistent policies, investors are not comfortable enough to fund projects that span more than an administration, maybe 4 years or 2 years. Also, just in terms of quality of the projects, quality of the issuers, that's a big issue in terms of being able to see those projects that are well structured, that investors can fund. I think another thing, especially in Nigeria, we'll look at the fluctuation in exchange rates. Most of these projects have dollar components there, and fluctuation, sometimes makes these projects, they don't make sense in the end. So that's one area. So just in summary, I think the policy environment, the inconsistencies, and then the projects themselves.
All right, let me go to Dr. Evans in our Abuja studio. We've seen, I know you're in the capital market. Are there any existing financial instruments or mechanisms specifically designed to support patient capital investment, in sustainable development in Nigeria?
Yeah, thank you very much for that question. There are tons of instruments that can be used to mobilize capital at scale and to innovate how capital is deployed to where it is needed most. I could categorize those instruments into three broad categories. You have debt-like instruments where essentially you're providing loans to projects, or you have equity products where you are taking an ownership stake in the projects. But in addition to that, there's a new class of instruments which I call basically outcome-based financing, where developers or investors are being paid and rewarded for achieving certain outcomes. And I can give examples of those. Now, if I look at the debt instruments, gender bonds is one fast-growing category, which is basically bonds that are used to finance women-owned or women-operated enterprises, basically providing women empowerment. Two is green bonds, which are used to finance environmentally friendly projects. And then on top of that, we can also have now a new class of assets, instruments called KPI-linked or sustainability-linked instruments. And in addition to that, we've also seen innovation where there's been an attempt to link carbon markets or carbon credits as a way of enhancing the various instruments that are being financed, like debt instruments and all that. So there are a suite of different instruments that are being available and can be used to mobilize capital at scale, as I said, from both domestic and international sources of capital into Nigeria and elsewhere.
Right, and looking at these markets now, who can play in it? Is it just institutional investors, or is there also a market for retail investors?
There is a market for both institutional investors and a market for retail investors. And of course, what I described can be used directly into projects, but we can also have collective investment schemes or fund structures that can also mobilize capital from retail investors at the very retail level or at the high network level, and even institutional capital can also be mobilized through vehicles like funds and other pooling vehicles to invest larger sums into projects that require those kind of capital.
All right, let me swing this to Mr. Aguda, join me via Zoom. So looking at regulation at this time, how can the Nigerian government create an enabling regulatory environment to attract patient capital for sustainable projects?
Yeah, I think one key thing is legislation, right? Long-term investors, institutional investors are more comfortable, when there's enabling legislation, meaning that it's not subject to the whims of any administration or any individual. It's there in black and white, and then they're compensated because of that, right? Also, the legal environment. If anything goes wrong, we're able to use the legal system to be able to address concerns. Also, I think, the government being creative, and I like Dr. Evans speaking about the creativity in terms of KPI links and outcomes. So the government being creative in using some of these outcomes to spur those investments and also to reward the investors. In addition to things like off-balance sheets, using the government's balance sheet to be able to fund these things in terms of guarantees and some form of commitments to investors to realize that even if they do fund it, there's some backstop somewhere. So I think those are the things that the government can do, in addition to ensuring that the capital markets is developed enough to be able to list some of these companies, some of these projects, so there's transparency. Once there's transparency, institutional investors are more comfortable to invest.
All right, Mr. Aguda, let's look at what's happening in other countries now. What are some, successful examples of sustainable development projects in, other countries that have effectively mobilized, patient capital, and what lessons can, we learn from those countries?
Yeah, I think other countries that have been able to successfully do this, both the fiscal and monetary side have to be on the same page. So whether there's a trade policy, there's a fiscal policy, everybody has to be moving in the same direction. So if the government wants to promote better gender, youth, sustainability and environment, then the policies need to be able to favor that so that investors can flow to. So where there has been success is where, the whole country is moving towards a particular area. You don't want, whether investors are thinking about this and monetary authorities or fiscal authorities are thinking about this, there has to be unison in terms of in the way we see development and what we want to do as a nation. And we all move forward in that direction. If there's a break in ranks, then it's not going to work, And we've seen countries, Malaysia, Singapore have done this quite well, and areas that we can learn from.
All right, let's go to Dr. Evans in Abuja studio. Now, how can the government and private sector, work together to create a pipeline of viable and bankable, sustainable development projects that are attractive, to patient capital investors?
Yeah, a very good question, and I think that's one of the challenges that we generally faced, which is that we don't have enough bankable projects, and there are a number of things that can be done, not just by government, but also by the private sector. So project preparation facilities is one important thing that can be done. So that is putting money to support entrepreneurs who have projects that are not necessarily ready, to help them make those projects bankable. That's one important thing that can be done. And of course, if you're providing capital to support preparation, that capital can be recycled if those projects go to the market and raise money successfully, so that they can benefit another pipeline of potential projects. Oguchi has talked about government policy that can also be very, very catalytic. So it's again looking at the PPP framework, not necessarily at the federal level, but also at the state level, so that we can have a certainty in terms of what kind of projects can be financed, what kind of concessions are there, how you negotiate power purchase agreements that are certain, and in what currencies. That is very important. Providing, in some cases, incentives, including tax incentive, I must say, or at least removing tax disincentives that might exist to financing certain projects will be quite important as well. So there are a number of things that can be done. Let me just add one more, which is the blending. So using guarantees or using blended finance, so that's financing from the public sector, blending that with the private sector, using blending instruments, international and local. That is very important because that kind of reduces the risk that might be perceived in specific projects.
Yes, thank you for that. Let's go to Mr. Oguchi now. I know earlier this week, you guys had a meeting, and definitely the main conversation was about patient capital. Can you give me some other, key highlights from that meeting?
Yeah, thanks. I'll just jump on what Dr. Evans has said. One of the things that came out clearly is the blending, right? Because what typically happens when we talk about either development or sustainability, they're always pushing back to the institutional capital to say, you guys need to receive less in terms of receive less than inflation. And the institutional capitals are saying that's not the way to go. We want to be able to receive commercial return, but if it's blended with either government finance or development capital, then it can be given to those that need it at the rate that is encouraging for them to be able to pay back. So I think that came clearly. Another thing that came out clearly is the need for partnership between institutional investors, but also partnership with the government and other development partners. That's very important, and that came out clearly in the past week.
Right. All right. I want to thank you both, Mr. Oguchi Aguda, CEO, PENUP, and Jaiz Vice Chairman. We have Dr. Evans Osano, Director of Capital Markets, FSD Africa. Thank you both for your perspective this morning. Thank you.
Thank you.
Thank you.
Thank you.
All right, we'll take a quick breather now. When we come back, we'll look at the cost of living crisis. How can palliatives be shared transparently? That's the next conversation. Just stay with us. And with the removal of subsidy on petrol, it consequently has resulted in the increase of prices of virtually everything, including food and transportation. The average Nigerian's disposable income is squeezed at this time, and there's been a lot of talk about, palliative. But the question is, how do we ensure the vulnerable actually get these palliatives? Let's talk to Charles Okafomba, co-founder and CEO and Convexity, joining me via Zoom. Good to have you on the show.
Yeah, hi, Laddie.
Yeah, good to see you. Good to see you. And definitely, Nigerians are going through a lot right now, having to pay so much for fuel. That's raised the cost of, everything from, food and transportation. And we've heard about palliatives. And the narrative is that, the vulnerable hardly get, these palliatives to cushion the effect of rising costs. Tell me how the government can, distribute palliatives in a transparent way.
Okay, thank you, Laddie. So there has always been issues with palliative distribution in the country. Even giving aid to the needy or to the vulnerable that's always been an issue. Just before I go there, there is even this publication that said, it's a UK publication, that it's better you burn your aid money than give it to Nigeria. Wow. And that is a big blow to us as a country, because it seems we cannot be trusted to do what is right. So there are different means or model which the government can actually distribute palliative. And that can be, number one, we know of the National Social Register that has actually been done, although there are contentions on how correct it is or how true the records are. So what the government can do is ensuring transparency. That's the key thing that they need to work on, ensuring transparency. Now, the transparency is the palliative itself, or whatever that needs to be distributed itself, gets to the beneficiaries. And one way that can actually be done is using technology. And I won't want to go deep into just blockchain as a means for that to happen, but generally technology can be used to facilitate that. And one of the ways technology can be used to facilitate that will be what we call a proof of personhood. Right? So those that are actually being onboarded to such a program, you need to prove that these people are actually real and then they are unique. So you can have unique identity system, maybe using their iris, or you can have them integrated into the national identity system, or any other means that can actually be used to prove that, yes, these people that are being given these palliatives are real humans, and then they are not doubled in the register. They are not like you have one person being registered twice or 10 times and all that. And that's one. Then another thing is ensuring that the palliatives that are meant for a location gets to that location. So it can be built in such a way that you have a palliative system that can't function outside that location itself. It could be geofenced in such a way that the beneficiary can go to a vendor with a token. It can be a paper voucher, it can be an SMS token, or even with a wallet system that they are used to, or maybe those that are tech literate can go with their mobile phone and has a wallet in it. And that wallet contains what we call a token system. Now, that token is where the blockchain comes in actually, because it gives that transparency. Now, that token can be taken to the vendor that is meant to serve that beneficiary or that locality. So until the vendor doesn't get the money, right, directly, the government, because what we are seeing, or what we've seen even from the COVID palliative, is the vendors are gotten, they give them the fund, they say go and distribute, and then you hear stories of it ending up in birthday parties and all the stuff, doesn't get to those that it is meant to get to. So the vendor can be contracted that, okay, you have bags of rice. Now, these bags of rice, or you are a chef or a caterer, you cook. So now, until you serve these people that are meant to get this palliative, you get paid. Now, the money has already been transferred to the beneficiaries, but in the form of token or in the form of a voucher. Now, until they go to the vendor to present the voucher, and the vendor confirms that, okay, this voucher is authentic and all that, and then provides what the vendor is meant to provide to the beneficiary, then they can collect the voucher in return. And
right, Charles.
convert it to.
Yes, Charles. All of this sounds great, and it does, show a lot of, transparency. But let's look at costs now. How much would this kind of technology cost the government?
Well, it's relative, right? We've actually built something like this. We call it CHAT, right? That's Conversity Humanitarian Aid Transfer Solution. And even the UNICEF is currently behind the project itself. We want to ensure that transparency. The cost it's not that big. It's something that can be done if the will is there by the government. If they want to build something like that, then they can go ahead and build it. I don't want to be specific on the cost, right? Because it's relative. But for us, we've actually spent a lot putting this together. Actually, we started this with the NGOs in mind, right? Because we know there are lots of issues when it comes to distributing aid from donors to the beneficiary. So we had the NGOs in mind, but this can actually be used by anybody, can be used by the government. So you have a way of showing the donors, right, that what has been given or the funds that is meant to go to the beneficiary gets there. Because what we are currently having in the whole space is just opaque, right? It is covered, it is shrouded. You don't really know how much has been given and if it really got to the beneficiary. So that's why we doubt when they say they distributed 200 million or 300 million and all. So, okay, who are these people? But we have a system whereby you can easily know, okay, these are the locations and the data is showing you. We might not really have, we don't really need to have their PI, that's their personal information, or those that these things were given, their personal details and all that. But we can have a way of identifying the unique humanness that this person that, or this location, or this number of persons around this location gets what they are meant to get. And
okay, but Charles, we know artificial, intelligence is the rave, right now. Is that playing into this technology in any way?
Yes, it can. It can. So there's what we call proof of personhood, right? And that proof of personhood is you need to prove that this person is actually human. So one thing we even did, we actually added that it's machine learning. You need to it's like a system, a camera system, right? And that system identifies that this person is a human due to based on maybe their facial expression, right? So let me just give an example. So in order for us to be sure that this person that is being onboarded into a program is human, we say, okay, the person we need to blink his eyes, or we need to smile, or we need to do his head this and this way, just to prove that this person is human. And then we can take it a step further by going for their biometrics, could be their iris, could be their fingerprints and all that. So there are different forms of ensuring that this person that is coming to this program is unique. That's number one, which is critical. It's unique that the person is not registered twice, and also that this person is a real human. Okay, so you don't have somebody entering data into such a platform and then using that to cash out from the system.
Exactly.
So that's one of using AI in such a
and I guess that way we don't have maybe a goat, trying to be a beneficiary of some of these palliatives.
Exactly. or having one person being registered twice. And getting such a palliative.
Exactly. All right. We hope the vulnerable, are reached at this time, and definitely we hoping the middle class also gets something, going forward. Thank you so much. It was great having you, Charles Oka from Bar, co-founder Convexity. Thank you so much.
All right. You're welcome.
All right, now let's look at what's happening in the markets, and we have Anyete with those details at this time. Yeah, Anyete, I don't know if investors need palliatives at this time. Good morning.
And thank God it's Friday.
Do investors need palliative? No, they're investors. They don't need palliatives.
Well, of course, you just never know. One thing is that investment is an option, and of course, people decide to spread their portfolio. Put money one side of the market and another, but human needs are never, human needs are insatiable. So palliatives, I'm sure you'd even want to get some palliatives.
Of course, I need palliatives. How much I'm buying fuel at this time?
So it's not just about investment. Always get what can increase your flow of income.
Right.
So now for Thursday's trading session, this is how the market turned out. Another day of sell pressure from the market, and the market was down in basis point more than 204 basis point, translating that to percentage, that's 0.31%, and in value terms, that's about 111.15 billion naira, but what you have there is just about 111 billion naira, and that's no thanks to investor sell-off on the shares of the likes of GTCO, FBN Holdings, and then of course we also had a negative market breadth. We had about 38 losers against 14 gainers. That's it on the board. Take a look at the activity chart. It was kind of a mixed picture there. The impact that we saw from the GTCO and FBN Holdings was countered by some other bellwethers. We have 5 tier 1 lenders, but 2 tier 1 were down, and then of course the tier 2 lenders also contributed to that market, making a green close for Thursday's trading session. But look at the other side of the market. 0.66% for the consumer goods sector, which is down a second day. A reprieve for the industrial goods counter, up by 0.01%. And then insurance sector, this time it was down by almost 1%. Oil and gas still maintaining the positive trend, which it's seen in the last couple of days now. And then month to date, we're at, don't forget, the month of July is gradually winding up. The last day was going to be Monday, and that will be the last trading day for the month. But so far, we're still in the positive territory, 7.4% and 27.8% for the year. And then in terms of the activity chart, we saw a rebound for the volume of activities there, 1.76% for the total volume, and then a downside for the value, as you can see on your board there. So now we'll be talking about the fixed income market, but off screen. But for the analysis of the equities market, let's talk to Oluwaseun Dosumu, the head of investment research at Pattern Securities, to give us more details about the market and the way forward for the rest of the trading session. Thank you for joining us, Sean.
Thank you, Anita. It's good to be here.
Okay, I know I've been talking too much, but let's leave the analysis for you this time. First, the market 2 times this week, coming from the week of the MPC's rates decision, which saw a moderate rate hike. How has this impacted the market, and as well as a flurry of second quarter, and first half of the year results? How is this affecting the market?
Thank you for that question. So we've seen, like you mentioned, we saw a mild pullback in the last 2 days, and that is generally because of profit-taking activities. We've had a plethora of earnings hitting the market, and we've seen that investors have reacted. We've had mixed reactions now to these results. A couple of them have been good. For instance, we've seen that in the oil and gas sector, the downstream oil and gas sector, the performance has been quite good. In likes of Seplat, MRS, we've seen their results come in. Interestingly, for the banks, we saw FBN Holdings result and Wema Bank, which was also quite good. One pattern we've observed is the fact that companies have been benefiting from the FX revaluation gains. That has actually helped their numbers. And for some of them, we've seen that the FX adjustments has actually impacted them negatively. Like for Airtel, for instance, we've seen that the FX adjustment has impacted them negatively. Apart from that, another line item that has been affecting companies has to do with finance costs. We've seen that finance costs for several companies have actually been quite high, and it has been affecting their bottom line figures. You talked about, the general performance. I don't think that the impact or the outcome of the MPC meeting actually affected, the performance we're seeing. If you look at the charts, if you look at the numbers, you'd see that the market is actually trying to break the performance that we saw in 2008. So right now, what we're having is like a double top. And after that, we're seeing a mild pullback. So I think that right now, what the market is looking for is a catalyst, something that would actually spur investors to actually take more positions in the market. We've been seeing companies announce, interim dividends. Some of them have been quite good. Others, people were waiting for the announcements to actually hit the market. And that would actually let us know whether or not that would drive more investment and participation in the market. So if you look closely at the sectors, you would see that this year, the oil and gas sector and the insurance sectors insurance and the banking sector have actually led, the performance. They've outperformed all the other stocks in the market. Interestingly, something happened in May and June. We saw more foreign participation compared to the start of the year. So it's just an indication for us that foreign investors are coming back into our market, even though the amounts are not substantial. I mean, for the month of May, we saw the foreign participation in terms of in Naira terms was about 37 billion. For June, that's for the month of May. For the month of June, it was about 46 billion. We know that domestic investor participation is still the key driver of the market overall performance. But then we're seeing foreign investors coming to our markets. I mean, we have the positives and the negatives. The positives in the sense that, they will deepen the market. The negatives in the sense that now Nigeria or the markets, the NGX may now be exposed to foreign shocks. Because we know that in the last 3 years, when we didn't see foreign investor participation, we didn't see sizable foreign investor participation in our markets. Nigeria was exempted from foreign shocks.
Okay, Ashil. Yeah, I know you have so much information to give us about this equities market, which is the barometer of the economy, but I think we'll leave it there, and we're quite impressed with that analysis of the market and the performance of equities within this period. So thank you so much for your time. That was Oluwaseun Dosunmu, Head of Investment Research at Pattern Securities, giving us details about the market. So, Ladi, for the fixed income market, just in a nutshell, the bearish sentiment continued across the fixed income markets, the bonds and the treasury bills. Then the Naira, also in the negative, was down by 3.7%.
All right, I guess it's risk on at this time. Thank you so much, Anita, giving us the details there from the equities market and the fixed income market. Let's take a look at other markets now. Let's see what's happening with the crypto market. We see Bitcoin, neutral. That's the sentiment we're seeing there. Looking at the fear greed index, showing that traders are neither bullish or bearish at this time. They're neutral in the middle. Let's look at the top cryptocurrencies we tracked. $29,174. That's down 0.89% at 8 a.m. this morning. That's what Bitcoin is trading at. Ethereum, that's 0.74% down. So we're seeing marginal declines this morning for most of the top cryptocurrencies there. Let's talk to Eliman Dambo. Well, we'll bring Eliman Dambo in soon. Now, IMX there, the top Guinness counter, 11.55%. 80 cents, that's what we're seeing for IMX on the top Guinness counter. Double-digit gain. Casper, 4 cents, 5.97% up. We see Nexo, ICP, Internet Computer, that's been on a downtrend ever since it listed. It's trading about $400 at some point, but see there, $4.22, 2.28%. I believe we have Eliman Dambo now, financial market analyst. Hello, Eliman, good morning.
Oh, good morning, Lottie. How are you?
I'm fine. Great to have you, Eliman. Quite a week for Bitcoin so far. Still below that 30K level. What are the charts telling you about resistance and support zones?
Yeah, no, it's been interesting. Of course, a few weeks ago, we saw Bitcoin climb to a 15-month high, I believe, after the Ripple ruling, breaking briefly out of that 30K or 32K level. And of course, since then, it has been on a downtrend now, as you rightly say, settling on a floor of around 29K. So that floor of 29K does seem to be firm now, but it does look like there is some optimism that it could potentially move back towards 30K. Especially in the event if the relative strength index of 14 days goes above the 45 level.
And what are you seeing for next week? Are we seeing a downtrend or maybe some move above that 30K level?
Yeah, no, exactly. And I think with this week, of course, we had the Fed announcement, we had GDP data coming out from the US, we had consumer confidence data as well. So there was a lot of fundamentals. Of course, next week you are going to have non-farm payrolls, but there's going to be less in the sense of fundamentals. And of course, whenever we don't see so many back-to-back fundamentals, there's more moves in the price in a particular direction. So again, it really depends what happens now. The RSI is currently tracking at around 42. So if it remains above that floor, I do believe it could probably push above 30K next week.
Are the technicals showing any oversold region at this point?
Yeah, exactly. So at the moment, it is relatively oversold compared to where it was, let's say, even 10 days ago. So again, it is somewhat at a floor now. So it is found a floor in terms of being oversold, which is why I believe bulls could potentially re-enter the market to take the price not only above 30K, but potentially towards 32, which is the real resistance level. The next real resistance for Bitcoin is absolutely 32K. Absolutely
32K. That's Eliman Damble there. That's what's telling us for the absolute resistance for Bitcoin. Thank you so much, Eliman Damble. Always great to have your perspective, and enjoy the weekend.
Thanks so much. Likewise.
All right, now, let's look at the top losers now. Let's see, make it out. Top in that count to 5.98%, $1,167 per coin. And we see SNX on that counter. Theta was that was up yesterday, but now we're seeing a pullback, maybe some profit taking, 77 cents, 4.16%. So that's how the market is looking today. It's neutral, not bearish, not bullish at this point. We'll see what happens next week in these markets. So that's the show today. Thanks so much for watching. Don't forget to join us 1:30 for Business Incorporated. Join me again. I'll be joining you at 1:30 to bring you more developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on videos, you can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.